Tensions in the Middle East are sending some serious shockwaves through the global markets right now. And if you're an investor in India, you are almost certainly feeling that turbulence. So today, we're going to break down exactly what this recent escalation between the US and Iran means for your money, specifically your stocks and your gold investments.
So let's just cut right to the chase, right? The most important question on everyone's mind has to be this. Is your portfolio really ready to handle this kind of geopolitical heat? All right, let's dive in. Here's how we're going to tackle this. First, we'll look at the immediate market shockwave. Then, we'll get into what exactly caused all this. After that, we'll see how Indian stocks are holding up, pivot to the big surge into gold and silver, and finally, we'll lay out a strategic playbook you can actually use.
First up, the market shockwave. And I want to be clear, this isn't just some regional issue. What we're witnessing is a major global shift away from anything that looks like risk.
You know, the overall mood right now, you can boil it all down to two simple words: risk off. That's just market speak for a massive stampede away from assets that seem risky, like stocks, and a rush towards things that are considered safe havens, like gold. Basically, investors are battening down the hatches. Okay, so what in the world happened to make everyone hit the panic button like this? Let's do a quick recap of the events that really lit the fuse on all this market anxiety.
It all went down incredibly fast this past Saturday. First, bam, reports hit of an Israeli attack on Iran. That was followed by confirmations of US military strikes. And just like that, any optimism about nuclear diplomacy, it just vanished. Poof. And the markets, well, they reacted instantly.
All right, let's bring it all back home. What does this mean for the Indian market? We're going to zoom in and analyze the direct impact on our own Nifty 50.
You know, the expert consensus, and you can see it right here from SBI analyst Avinash Gorakshkar, is basically be cautious, but don't panic. The forecast is for some weakness, maybe some sideways movement for a while, but not a huge catastrophic crash. Part of the reason is that the market already did a lot of heavy selling on Friday, sort of bracing for impact.
Okay, now this is where things get really, really interesting, because we're looking at the actual numbers that traders have their eyes glued to. Think of this like a battlefield map for the Nifty 50. There's a ceiling up there, what traders call resistance, right around 25,300. And then there's a floor, or crucial support, holding the line at the 25,000 mark. These are the absolute key zones everyone is watching. And to add another layer to this, Sumit Bagadia over at Choice Broking points out a really important technical signal. The Nifty closed below its 200-day exponential moving average. For traders, that's like a giant red flag going up. It's a strong confirmation that the short-term trend has turned stormy, or in their language, bearish. But hey, while stocks are getting hammered by all these headwinds, it is a totally different story for precious metals. What we're seeing is that classic surge to safety. And this chart just illustrates that flight to safety perfectly. As all this capital is looking for a safe place to hide from the stock market's volatility, we're seeing these really bullish targets for both gold and silver. Analysts are watching a key resistance level of $5,300 an ounce for gold on the COMEX exchange, which is, the big leagues for metals trading. And here at home, we're looking at targets as high as 1,70,000 rupees for 10 grams. And look, this isn't happening in a vacuum. We've seen this movie before, and very recently, in fact. During a similar conflict that lasted 12 days just last June, we saw this exact same dynamic play out. Gold shot up 7%, while the Nifty dropped over 3%. It's like history is rhyming, isn't it? Okay, so that's the what. Now for the most important part. So what? What should you actually do with all this information? Let's shift from just analyzing to taking action. Here's your strategic playbook. All right, for your stocks, the consensus from the experts is pretty clear. Play defense. That means probably holding off on making big new buys, or what they call initiating long positions. Instead, the idea is to shift your focus to defensive sectors like FMCG and pharma. And why those? Well, think about it. No matter what's happening with the world, people still need to buy soap and they still need their medicine. That makes these companies' earnings way more stable when things get choppy. Now, let's talk about gold and silver, because the playbook here is totally different. The advice is to consider dipping your toes in, buying in phases, not jumping all in at once. And you absolutely have to keep an eye on those international COMEX resistance levels we talked about. If the price punches through that ceiling, it could be a signal that there's a lot more room to run. All right, so let's tie this all together. What's the big takeaway here? It's that uncertainty is the new normal, at least for the time being.
Bullion, or gold and silver, is probably going to be favored over stocks until we see some kind of real diplomatic progress. The next huge market move isn't going to come from an earnings report, it's going to come from a news flash about US-Iran talks. That's what you need to watch.
And that leaves us with one final and I think really important question for you to think about. It is crystal clear that geopolitics has become the new boss in the market. So you really have to ask yourself, is my investment strategy nimble enough? Is it agile enough to adapt to this new reality?